Welcome. In this video, what will Zbcn coin price do from here? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking at the short-term price action, a falling trend line is clearly visible on the chart. This structure shows that the price has been making lower highs and lower lows recently, and that the market is under some pressure in the short term. However, the important point here is that this falling trend line has now started to squeeze the price, and the price is preparing to make an upward move to get rid of this pressure. In technical analysis, such downtrends usually weaken after a certain period of time, and the direction of the trend starts to change as the price makes a breakout above it. In the current outlook, the price is very close to this falling trend line, and this is a development that should be carefully monitored by traders. This is because this line also acts as a dynamic resistance line. Every time the price approached this trend line, it faced selling pressure and witnessed downward pullbacks. However, this situation will not last forever, because there is a well-known rule in technical analysis. The more a trend line is touched, the more likely it is to break. Therefore, the probability that this downtrend will weaken over time and the price will break out to the upside increases. If this falling trend line is broken, it is possible that there will be a significant relief in the market, not only technically but also psychologically. This is because breaking through this line sends a message to market participants that the selling pressure has subsided and buyers are starting to take control. This message may also cause buyers who were previously on hold to step in. At the same time, the closing of short positions with stops also adds momentum to the price. When such breakouts are usually supported by volume, it is easier for the price to reach the first resistance levels ahead. If the price can break this downtrend line upwards on volume, this could open the door not only for short-term but also for medium-term upside. Because when short-term downtrends are broken, they often signal a change of direction. Especially if this break is supported by a retest, that is, if the price first breaks and then touches the trend line again and bounces up, this is considered a very strong signal in technical terms. Such a pattern gives traders confidence and creates a positive perception in the market. After the trend breakout, the price is likely to test the previous highs first. These points can be considered as short-term targets respectively. In addition, crossing these levels with volume may mean achieving larger targets on larger time frames. This would be an encouraging development for investors to maintain their positions. A possible move above the downtrend could also change the overall perception of the market. In other words, this breakout is not only a technical crossing of a line, but also a change in the emotional atmosphere in the market. Investors who have been under pressure for a long time may show renewed interest in the market with this breakout. This would bring fresh capital into the market, further strengthening the price. As a result, this falling trend line plays a critical role in the short term. Breaching this line on the upside could create a great opportunity for the price to regain momentum. If this move is supported by volume and in line with the technical indicators, the barriers to the price can be overcome one by one, and the uptrend can start on a more solid footing. In the current situation, the fact that the price is preparing to realize this breakout strongly reflects the potential for the market to enter a positive process. For this reason, this trend line should be closely monitored and price movements should be carefully monitored after the breakout. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. Within the framework of the Elliott wave theory, we are currently seeing price action taking shape in the second wave. This phase is often interpreted as a period of short-term market correction and investors looking for direction. Second waves are often pullbacks that naturally develop after the strong momentum of the first wave, and such corrections lay the foundations for the next strong move. In the current situation, the price still manages to stay above the initial level of the first wave, indicating that the structure remains valid and the Elliott wave scenario is still working. As long as there is no break below this level, we can continue to be optimistic about the direction of the price action. Especially if the market transitions to the third wave after a healthy second wave, this is usually a harbinger of a much stronger and more voluminous upward movement. This is because, according to Elliott theory, the third waves are the strongest and most bullish. Therefore, the short-term uncertainties and price fluctuations that may occur during the second wave can actually be seen as a prelude to a larger and positive price move. Currently, there are technical indicators suggesting that we are nearing the end of the second wave and the beginning of the third wave. The levels where the price has found support suggest that buyers remain strong and interest in the market remains. In addition, the pullback on falling volume may indicate that the selling pressure has subsided. This suggests that the price has now formed a floor and is preparing for a potential upside move. Therefore, if the price resumes its upward movement without lingering too long in the second wave and continues to stay below the initial level of the first wave, the way will be paved for the transition to the third wave. Such a transition could boost investor confidence and push the price to much higher levels. All in all, the current structure continues to paint a positive picture, and if the current technical outlook is maintained, it would not be a surprise to see the start of a fairly strong bullish move. The price should follow here. The 200 EMA, exponential moving average, one of the most important technical indicators on the chart, is a critical reference point for determining the direction of the long-term trend. This average line is closely monitored by traders and algorithmic systems, because whether the price is below or above this level gives a big clue as to what the general trend of the market is. In the current situation, we can see that the price is approaching this important average, and this area works as a technical resistance. However, the main thing to note here is the possibility that if this level is breached permanently, the market will evolve structurally in a more positive direction. Price settling above the 200 EMA makes sense not only for short-term investors, but also for medium and long-term investors. This is because this level has worked as strong resistance or support many times in the past, giving investors confidence in the direction. If the price breaks this level on strong volume and starts to close above it on a daily basis, it would be a very important technical breakout. Such a scenario would be a positive signal not only for the short-term movements of the price, but also for the overall market psychology. In other words, it would reassure investors and lead them to re-engage in the market. In addition, a sustained price movement above the 200 EMA is usually considered a sign of an upward trend reversal, especially if there was a sharp downward reaction from this level before, and the price now manages to break through this zone. This can be evaluated with the principle of old resistance becomes new support. In this case, the 200 EMA can now act as a support, and the price can use this level as a floor to continue its upward movement. Such structures are very important in technical analysis because traders often take positions based on such critical levels. Therefore, a breach of the 200 EMA could increase the interest of a large group of investors who trade on technical analysis. This, in turn, would increase demand, creating a favorable environment for prices to reach higher levels. Such a breakout could also trigger algorithmic buy orders, which could accelerate the move. Persistence above the 200 EMA is not only important for price, but also for the coherence of other technical indicators. For example, RSI moving into positive territory, MACD giving a buy signal, or a noticeable increase in volumes would be positive signals supporting this breakout. When all these technical conditions come together, it may be possible for the price to enter a much stronger uptrend in the coming periods. To summarize, if the price breaks through the 200 EMA, it could usher in a brand new era in the market, not only technically, but also psychologically and strategically. Since the majority of investors are watching this level carefully, a wave of buying after the breakout could pave the way for the price to rise to levels it has never reached before. In the current outlook, this possibility stands out as a strong possibility, and if the price takes this step successfully, a positive scenario may await us in the long run. Above 200 EMA is always positive for the price. The best rises come above 200 EMA. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.